welcome everybody to the Credit Union Connection. I am here with the no need for introduction, Denise Wymore. Welcome, Denise. How are you doing today?
Good, thanks, Sarah. You're looking great, Grandma.
Thank you so much. So we've been talking a lot. I'm going to let you start with your story because that'll kind of segue into what I was thinking.
Yeah. I don't think a lot of
Your
people know how we know
story
each
of
other.
how the De Novo Credit Union Collective got started.
Yes. So it was kind of interesting because the first time I ever met you in person and Randy Carnes in person, Sue Mitchell asked me to facilitate a discussion panel at the Underground, and I think it was Money 2020 in Las Vegas, wasn't it? Like, yeah,
Yeah.
which is coming up again. And I never met you guys. I met you ahead of time. I remember the conversation about who was going to go first between you and Randy. It was kind of funny. But I'm on
You knew
stage.
Randy was going first.
Oh yeah, yeah. And then, did I know how to like kind of moderate that? And I was up for it. But Randy said something that I will never ever forget. Well, it changed the whole course of my life, honestly. He said, in any industry where there are no new entrants and there is a massive consolidation of the existing uh, entities, that signals the beginning of the end of that industry. And that's what's happening to credit unions. And I remember saying there on stage, and it was seriously a moment of, wait, what? And I couldn't really have that moment on stage, so I had to bury it. But as soon as I could, I was looking into like, how is it we're not starting new credit unions? And I guess I assumed that, we were like, that was somebody's job. And so what I did was I got connected with some groups that tried and failed, tried and bailed, and a couple that actually made it happen. And through that process, we kind of identified the hurdles to that. And we originally called ourselves like this De Novo support group. And it was a group of like three De Novos, three groups of people that were trying to start a credit union. And they were all involved in credit unions, which was kind of unique. And so they were all lamenting about the process, and we were all kind of learning the process, and we were all kind of bitching about it and everything. And then one meeting, I said, you know what? Instead of bitching about it constantly, let's just do something. Let's do something. Let's fix it. Nobody's going to fix it for us. So
ESG, right?
let's get some shit done.
Yes.
So we came up with the name, the CU De Novo Collective. We got ourselves a website, and then we launched the idea at the Underground in also in Vegas, and it was kind of the weird COVID-y one where we had to broadcast live. Remember that one? So we officially launched the CU De Novo Collective website at that Underground. And that was an interesting one because that was in conjunction with an ACUSO. So then I'm standing in the hallway, and someone came up to me from a large credit union and said, I love this CU De Novo Collective idea. We'd like to support you. Can we give you money? We weren't thinking about money. And so then I was like, yeah, I want your money. But I said, well, let me get back to you. So I called Brian Witt. Do you know Brian Witt for Farley Water Witt? Yeah, I've known him for years. Brian, started this CU De Novo Collective. People want to give me money. What do I do? He goes, well, you need to form a foundation. How do I do that? I can help you. So, and thank God he does a lot of league foundations and everything, but I knew nothing, about 501c3 application took a very, very long time. Anyway, finally got the 501c3 with a purpose of raising money for grants to help start new credit unions is kind of the primary focus at CU De Novo Collective. But in the process of launching this website and kind of raising awareness about the disappearance of the movement was kind of the overall scorecard. If you look at our main page, it's really a scorecard about what's happening, both of the number we're losing and the few that we're starting. John Hernandez came out, joined our group with the caveat that we also should focus on how can we, save small credit unions. So we were in the process with the 501c3 and actually changed it so that we could provide money for both sides. But we're focusing right now on starting new credit unions, and I'll tell you why. Sarah, I know you let me write for your publication. I really appreciate it, so I can write about my passion for small credit unions and starting new ones. And if you look at the last 8, I wrote that article, did really well. When I went to write that article about the last credit union charters, it was just going to tell stories. Remember, I told you this. what I didn't expect to find and what I wasn't even looking for, but what I discovered were the last 8 were minority led. You
Mm-hmm.
know, 7 were Black led, and the other was Native American. And so when I looked at all their press releases and I started really like, I want to tell their stories, they all had a similar thread. They weren't being served by traditional banking or credit unions. Many were stuck in the cycle of payday lending and needed to get out. And they discovered that the best way to do that is to pool their resources. I'm reading these stories and I'm like big crocodile tears because I'm thinking they are retelling the story, origin story of credit unions in America.
Yeah,
And they're telling it to us.
exactly.
Right?
Yes, 100 years later. Yeah.
Yes. And I'm like, oh, gulp, that's amazing.
Mm-hmm.
So we decided, okay, we need to really help get these charters going. We've been working with the NCUA to make the process easier. And I'm not going to go into all the details about that, but let me just say we've had several people step up and volunteer a lot of time, resources. CU Policy Pro, I do want to give them a shout out. They're a big one. They give access, free access to all the CU Policy Pro policies and procedures online for the de novo applications. Huge time saver. I know of 4 groups that have already taken them up on that. But we also have the issue of creating more templates for business plans, marketing plans, and I'm working with the group AUX, AUX. I don't know if you know AUX, and Diane in the gang. They are helping us with that. So we're getting all of this pipeline. We're getting basically a really robust template so that when a new group comes in, they don't have to go it alone. Currently, they're staring at a blank piece of paper saying, write a business plan. They have no help at all. So we cracked the code on that. And then the big hurdle is raising that capital, right? And so our foundation, what's unique about it is that there was no entity where people could donate so that they could get a tax deduction for a capital infusion to a credit union. Because technically, capital has to be a donation. It's not repaid. There's no investment. You know, it's 100% donation, but there's nothing that says it can't be a donation through a proper 501c3, which is basically, you know, what we created. So we are launching on the 90th anniversary of Estes Park, the famous Estes Park meeting, the Louise Herring Fund, to raise money to start new credit union charters. And the reason we chose Louise Herring, mother of credit unions, for those that don't know, she started 500 credit unions.
You would think we could get one going, right? Just one.
Oh my gosh. I mean, I knew about her. And to be honest, when I was inducted in the America's Credit Union Museum, shout out to Stephanie Smith, amazing. She was on the wall with me.
Mm-hmm.
You know, and I remember, and they, you know, Dora Maxwell, I mean, these pioneers, these black and white photos of these women who we do talk about, but you don't really dig in and say, what would we be without them?
Mm-hmm.
Right. And Louise Herring, she was also, I don't know the whole story, but I know her whole story now. Youngest person at Estes Park. She worked for Kroger and she started Kroger Credit Union before even Estes Park. And they decided she should represent Ohio. They're on a train to Estes Park, and there's a woman that's taking like roll call. You know, it's a public train, making sure everybody is on that train. And she couldn't find this woman, Louise Herring, and she was like 23-year-old kid, and she dismissed her, thinking, you know, this young kid can't possibly be with us. Well, when Louise identified herself, kind of, you know, here, I guess Roy Bergengren was pissed that they sent such a young person. I love that part of the story too, because, you know, we kind of like, ooh, Roy, but not cool, dude. And so she ends up being like the secretary of the Estes Park and then goes on to, you know, start 500 credit unions, including founding the Ohio Credit Union League. And she helped to found the Kentucky and I think the Michigan League. And just for fun, many years later, founded what today is ASI, the private insurance fund for credit unions. So our plea or our ask of the credit union movement is to give 1% to the woman that gave 100% to the credit union movement. Because if we don't continue to charter new credit unions, it's not about getting back to 23,000 credit unions, which is, you know, really our peak. What we're really looking at is the purpose. And in the words of Edward Filene, we need to keep purpose constant. Every one of these groups that I've talked to and worked with has a very similar story. And the power of common bond is so overlooked today. The
Mhm.
reason that they will be successful is because of their common bond. And I remember having started in credit unions in the 80s, the single sponsor common bond credit union. When you took out a loan, you knew that you were borrowing money from a coworker. I
Mhm.
mean, you knew it.
They
And there
sat
was kind
down
of
the hall from you, right? Yeah.
yes. So there was kind of the shame of repayment. It's like, you better pay this back because that's Bill's paycheck that you just borrowed. And a brand new credit union still has the benefit and the luxury of that, right? They're loaning. They want to create a financial cooperative so they can take care of one another.
And I think
And so, yeah, go ahead.
so I was gonna say, I think it's interesting the way you said they have the benefit of that because so many are only talking about scale. That's the
Right,
big
right,
benefit. You're talking
right.
the exact opposite, right?
Yeah, small is beautiful. They can be successful. They will be successful. We do need to help them. And the other great thing about, so consider this, when I did my discovery time and started working with, Martha and Kyle and everyone at NCUA, been great to work with, is in my discovery phase. Uh, a year ago, June, at an NCUA board meeting, Martha reported that there were 51 applications in the pipeline.
Yeah.
And so I wanted that updated number. So in June of this year, I got that updated number and it's 63. Keep in mind, for those listening, we as a movement are not promoting the financial cooperative model. Unfortunately, we're really not. There is the state leagues, and I'm going to work really closely with them. That's why they were chartered in the 30s. The demand isn't quite there. It's growing, and that's important. But the demand isn't there for every league to have a specialist. And so what our ask is of the leagues is when you get someone who comes to you, because they often do, don't send them to the NCUA. It's not the NCUA's job to charter credit unions. It's their job to protect the insurance fund and to provide a charter.
Mhm.
But to get them through the process is not their job. And so we've already worked really well with the Cornerstone League for a de novo in St. Louis.
Mhm.
And we're getting a mentor credit union. We're getting in-kind donations of loaned executives. So that's how we, the CU de Novo Collective, can work with the leagues to help these guys be successful. But we need your money.
Yeah.
So let's get back. Let's get back
We
to the
don't just
money
need your
part.
help, we need your money.
We need your money. And if we were Italy and we were really smart, we would have done what Italy did. In Italy, it is a law that all cooperatives, so grocery store, every cooperative, including credit unions, must give 3% of their net income annually to a fund, and that fund provides startup capital for new cooperatives. Cooperatives are crazy successful in Italy because of that. We
Mhm.
don't have anything like that, unfortunately, but 3% we decided on our board. We have a rock star board of directors. Three is maybe a stretch. Let's go for 1%. And
Mhm.
what we're asking of the 1% is, I mean, ideally it would mirror Italy. It would be 1% of net income. But Allison Carr, who I just love, she's like, let them decide. Maybe it's 1% of non-interest income. Maybe it's 1% of a particular fee or 1% of some other, promotion that they do and the income they get from it. Whatever it is, we're calling it dealer's choice. But what we're asking is for you to kind of take that number into your accounting meeting and kind of noodle around and say, what can we give? How can we give back to start new credit unions? And QSOs, QSOs are, having been working with NACUSO for 5 years, I love QSOs owned by credit unions. The for-profit arm, they do amazing work. We also would really love to have the support of the QSOs, knowing that they embody cooperation among cooperatives, that six cooperative principle, and that if they can appeal to their board and the league foundations are also another big supporter of ours. They reached out to us first and said, we want to learn more, how can we help? So it's been a wonderful experience. Honestly, we're all volunteer. It's not a business. Nobody's getting paid. It's a volunteer grassroots effort, which we also love and want to keep it that way because that's how the credit union movement started.
Yeah. Now, I'm a CEO of or no, I'm gonna give you a harder one. I'm a CFO
Oh no!
of
Luckily,
a
I'm married
five
to one. Go
billion
for it.
dollar credit union. Why
Yes.
do I want to give you 1% of whatever income stream I decide?
Because you're a good person. It's a great question. And honestly, I've always felt like the CFO's job is kind of to protect income and bottom line kind of a thing. Um, it really is truly a give back to the movement. And if you think about it, the trajectory that we're on right now, if credit unions go away, and the math is not great, if credit unions go away, trade associations go away, CUSAs go away, the vendors go away, it's not good for anyone. And I think that also for telling the credit union different story, if we can point to starting 10, 15, 20 credit unions a year, banks aren't doing that. In fact, community banks are shrinking faster than credit unions right now. So let's talk about how we as a movement are supporting the formation of new credit unions that are minority-led credit unions, some of them in bank deserts. We have a new story to tell,
Yeah.
to be honest.
New underserved.
And so,
really, yeah.
Yep, a new underserved. And we want to protect taxation. That's a way to look at it, is that's truly an investment in continuing to tell the credit union a different story and in a new way, a new old way. Right? In fact, speaking of that, when Ox reached out to me, Diane is the CEO of Ox, Diane Parham, she's amazing. And I said the help that I needed from them was to create this template. And we called it Operation Cigar Box. Because the original credit union, so many were started in a cigar box,
Right.
they were
Yep.
simple. And what we cracked the code on was like these 8 credit unions that started are really pretty basic services. I mean, they are kind of like the original cigar box credit union with basic, shares, loans, signature loan, used car loan, the checking. We couldn't add checking till the 70s, but checking. But that's it. Really basic, small credit unions. And we also know that starting out small ensures the probability of success, right? We all know that. And so the more of the crawl, walk, run approach to the business plan is what we're doing with our template.
And so what sorts of, as you're working through these hurdles, you mentioned the policies, and you started, I don't know if this was your point, but you're talking about how limited the offerings can be at some of these new credit unions.
Yeah.
There's a lot of different hurdles for credit unions to overcome. What do you think is the biggest one, and how are you working on that one?
So some of the biggest hurdles for the new credit unions, obviously, and the real successful ones, my NCUA contact, who's wonderful, who's worked with this group that is going to get a charter, she said, Denise, all the charters that are granted and the ones that are successful all have the same thing in common, and that's that it truly takes a village to help them. And so we have an example of one that got in-kind donation of technology from CU Answers. Randy Carnes created that program, and oh my gosh, are they lovely to work with, right? So take the expense of core processing, basic checking features, website, they build a website, take that off of their balance sheet for the first couple of years. Boom, done. The in-kind donation from the loaned executive at the credit union in St. Louis. Second biggest expense, human resources, right? They just eliminated that. Those are probably the 2 biggest hurdles financially. And if they have partners like CU Answers and a loaned executive from a large credit union, we are setting them up for success, right? Because they understand the business. Oh, and then Ox, other reason I got involved with Ox was they've been silent heroes giving in-kind donations to these de novos after they get started by helping them with their first call report, by helping them with their balance sheet and working with their board and making sure that they don't financially get themselves in trouble, right out of the gate. And the call report's daunting. A small credit union might have to fill out, 7 fields, but just go find them right? on the 28 pages that is the call report. So they've been doing that, giving in-kind donations and doing it on their, not talking about it, not saying, hey, look what we're doing over here. So I think, and that's bringing the village together, right? Bringing the credit unions together. So even if you can't give money, if you could give, if you could be a mentor credit union for one of these groups, that is money. And giving a loaned executive is money. And it's win-win. This credit union in St. Louis has said it has been such a win-win for us because they get to learn. How many of us can say we started a credit union? that are listening. How many of you started credit unions that are listening to this?
Yeah.
Zero.
Yes.
And the CEO of this large, well, I'll say who it is. It's Bob McKay. He's amazing. And he even was like, I had to kind of rework my brain to think about starting one. Keeping one going is a whole different thing than starting one. And where would you start?
Right.
So if you can donate your time, that is very appreciated too.
All right.
And just go out to our website.
I'm going to give you a chance for final thoughts, and you've got about 60 seconds to do it. So what are your final thoughts?
My final thoughts is back to Edward Filene. Keep purpose constant, guys. Why did he start credit unions in America? Why do we need credit unions in America? And it is truly serving the underserved. And these small groups are doing just that. So please support him, because I know you support that notion.
Awesome. Thank you so much, Denise. Great to see you again.
Thanks, Sarah.